Thanks for taking the time, Mario.
No worries, thank you very much.
The first question I wanted to ask was, you've obviously got a new role at Pepper Money. Tell us a little bit about what you're doing now.
Yeah, so I've been with Pepper now for a good 6 years, originally as the Director of Sales and Distribution, and now taken on the Managing Director role. Really, what it really means is that now I am in charge of the day-to-day operations and profitability of the Australian mortgage and personal loan business. And I'm really looking forward to it. It's exciting. It's a challenge for me that it's no longer just a sales focused and driven role, but obviously the sales component still drives a lot of the initiatives that happens in the Australian business. The main differences between the two is that now I will assume control of the profitability, the P&L, and the day-to-day operations of the Australian mortgage and personal loan business.
Pepper has really set itself apart from the rest of the non-banks in this space in terms of, it's got a strong loan origination mortgage business, it's got the loan servicing business, it's also got the strong securitization program as well. You operate in global markets, North Korea, the UK, as well as Australia. Tell us a little bit about how all these different parts of the business are interconnected.
Yeah, look, it's been a global strategy for the business over the past probably now 6 years, a comfortable 5.5, 6 years. And it's fair to say now, looking at it, that the strategy has definitely come to plan and is definitely working as envisaged 4 to 5 years ago as we were putting the strategy together. Today, the offshore businesses will represent circa 50% of our total revenue, which shows you the level of diversification that we have in the business. And that 50% is not hinged on one country alone. It's across multiple businesses across multiple countries. And for us, the strategy at the moment is to make sure that the foundation is solid in each one of those businesses, and the appetite for new countries or new businesses in our M&A section of the business is definitely on the horizon. And with the same strategy, it'll be most likely the servicer-led, looking for a good, solid management team in that particular business, and then sticking to our core, which our core is obviously understanding credit, understanding servicing, understanding originations and lending. Today, it's now greater than 50%, on the cusp of 50% of our total revenue, and we don't see that slowing down either. So it's a really good balance of the businesses. If we have a look at the diversity versus the risk of having such a wide net approach, the good thing about it is that we are a servicer and a lender. Now, usually what tends to happen is that relies on the particular market in the economy in that particular market, of if it's a great economy, and then the lending will either emerge if we haven't lent there before, or it'll grow. If the economy starts to slow down or the lending market starts to slow down, then the servicing arm starts to kick in. So really it's an offensive and defensive strategy, which now has been in play for 6 years, and I am confident in saying that it's been very successful, and it's really rewarding, and we're delighted to see how it's all panned out. A lot of people were very sceptical on the plan, and why are we going to South Korea, and what are we doing in Spain, UK and Ireland, and all the areas that you'd probably say people will stay away from is where we gravitated to.
Just finally, I want to get down to what's happened in the Australian mortgage market over the last 12 to 18 months sort of thing. It's been a lot of change. There's a lot of different pricing movements. To the end of to 2016, we sort of saw the big banks and some of the non-majors as well increasing their rates. Has this created any opportunities for the non-banks and Pepper in particular?
Look, it has. Some more than others. Depends on the appetite that may have on the type of credit and the type of customer profile that they're accustomed to or used to originating. So with us, we've been pricing for risk since the day we opened our doors in 2001. So for us, it's not a foreign area. It's something that we do every day and do exceptionally well. And without being too biased, I think we're the best at it. No questions asked. And the reason why is that we understand the credit component, we understand the consumers, the personas, the attributes, the behaviour patterns that they have, to then make that calculated and well-deserved outcome in the credit assessment. So the customer themselves have always been there. It's whether the banks had the appetite to write it, whether they were pricing to accept a level of higher risk than your vanilla type loans, which at the moment, as you said earlier, which is, that landscape changes on a daily basis. Whether it be appetite from a bank, whether it be regulatory changes, whether it be pricing advantages, whether it's investment, credit impaired. At the end of the day, anytime a broker or a consumer has gone out and received any form of exception to the rule at time of assessment, that is deemed non-conforming. That's not prime. It was that particular person made that decision at that point in time to take on that risk. That's what we do every day. Banks do it on a very, very ad hoc basis and cannot go out to the market and commit to it. We actually go out and commit to it. That's the model that we have. Have we benefited from that? Definitely. And the way we have benefited is that we never went out to the market and changed our business strategy. We never went out to the market and changed our product appetite or consumer appetite. What we did do is stick to our core messaging, which was, we're here for you when the others aren't. And I think what happened for us during this year was the appetite changed for a lot of lenders, and then it opened up the doors for us for more brokers to then go, what else is out there in the market? And Pepper was the first one there to go and grab that. Now, there are others that change their strategy. There are others that change their core messaging. That's not us. And we will stick to that, and we know what we want for the year. We know how we want to play the game, and we don't just go hot and cold overnight. So that's not us. So we're very happy with it, because now what's happened is we've been able to showcase not only our products, not only the level of service that we give our customers and our brokers, but now the brokers are saying, wow, we could not have ever envisaged that you guys not only just did everything right from the start to finish, but you pick up the phone, your credit guys talk to me over the phone, we can work the deal together, and you're doing this all manually, and yet you can still do it faster than any bank. Manually and still do it faster than any bank. You're getting intimate with actually every application form. So, for us, that was the big thing for us this year. Brokers saw what we stood for. It's not just looking after customers that fell outside. Yeah. It was the service proposition, the people that we had. We have had constant recognition for our BDMs on the road, for the level of service that they give, the product knowledge that they have. All of these are a combination of who we stand for. It's not just hinged on a product. It's not just hinged on a service. It's all those components in one. So that's the benefit that we have. Every time someone moves in the industry, whether it be regulatory, whether it be a bank appetite, mortgage insurance, whatever happens in that area, the moment we get an opportunity to be with that broker and interact with that broker, we have a very high propensity to recoup that customer or that broker for many more deals to come. So it's a really good thing that we've noticed it over the course of 5 years, circa now. I think it's by around 38% year-on-year growth of the number of brokers that actually use Pepper, and that coincides now with the growth that we've had in the business. Yeah. Once again this year, it's fair to say that our business has grown again on record levels this year, and we don't see that stopping. It's not because we're taking on more risk. It's more brokers realising what we do and how good we are at doing it, and they are now going, well, we appreciate that. You're there for us when we need you. You're there for our customers, more importantly, when they need you. So, it's really refreshing, and we're excited because from our perspective, the horizon looks very strong. The non-conforming market is still the largest underserved market, period, in the financial sector. And I think the more brokers that jump on board, the more brokers that realise that there is a customer at the end of every transaction, the more our business will benefit, the more the customer will benefit, and the more the broker will benefit. So it's a chain reaction all the way through. We've never done a transaction that benefits a broker on its own accord. We've never done a transaction that benefits Pepper on its own accord. All three people, borrower, broker, Pepper, will benefit out of the transaction because we're here to give them a good service. We're giving them an opportunity to enter into a home or refinance or debt consolidate or whatever the case may be, and benefit to the broker at the end of the day because they've been able to help that customer and also get paid for doing that. So unashamedly, everyone is and should be happy in that process.
Good stuff. Mario, thanks very much for your time
No worries,
today.
thank you.